guys, Leggy here and welcome to a new video. Today we're going to be doing a massive Trading212 Portfolio update. A lot has changed. There's stocks which we had last time which I didn't want to get rid of, but I just decided to take profit on. But yeah, the main thing is, one thing is that we're back in profit. The second thing is that we've hit the 4,000 goal. So I believe last time I made one of these videos, we were around 2,600, so massive progress. But as I said, the main thing is that we're back in profit. So let's have a look at BAE Systems. So we're slightly down on here. We brought it a massive high, but it does pay a good dividend. And also, obviously, they've got all the big contracts with services. So yeah, long term, I think it'll be awesome. And it is back down below 1,000, which is, as long as it's down below 1,000, I think I'm happy to continue buying. We've then got Berkshire Hathaway, which we are slightly up. This one has shown continual growth over the years. Very stable stock, but as you can see, it's to get one share, massive amount. The next one we've got is BP. So BP is a very cyclical sector, as you can see right here. So we're at a high right now. This one will probably drop. It's got a nice dividend, so I'm fine holding it. But I will try and pick some more of this up in the next cycle when it becomes a bit lower. But yeah, this one will probably go down over time. But yeah, we'll try and buy some more when that happens. Then got Croda International, which we are a massive 13.97% down. But as you see, it's still massively down from its all-time highs. I will try and pick up some more of this to try and offset how far down we are. But this one's got a nice dividend yield as well. Same with Greencoat UK Wind. So again, this one is absolutely fine. We brought it while it was slightly high. Be nice to get this price down. But as I said, main focus is on ETFs at the moment, because if you guys don't know, ETF, you're more likely over a long period of time to make money than individual stocks. Next, we've got GSK, which is massively down from its all-time high. So I think that this is basically because GSK and Pfizer were doing brilliantly because of COVID, but also GSK took a massive hit because they actually split. And our next stock, as you can see down below, is actually Haleon, or however you pronounce it. So I think it took a bit of hit of that, but it just paid out a dividend. We got 97p because of it. Also be nice to pick this one up, but long term GSK I think is pretty stable. The same with this stock as well. It's followed a similar path, but they both recovered recently, and yeah. So next one we got is Legal & General. So this one paid out its dividends. So as you can see, every time it becomes an ex-dividend date, this one pretty drops, but it's been pretty stable over the years, and they do have continual growth. So I think this one is absolutely brilliant. I do like Legal & General. It pays a good dividend, good continual growth. I like their mission statement as a company with the continual aim to go green and go towards net zero, because in 2050 the EU and UK are aiming for net zero carbon emissions, and I think this is key, and I think they've got this all across their investment. Next is Microsoft. So this has actually had a spike because they acquired Blizzard. So that is excellent. People do say that, well, basically Microsoft, they tend to buy all their competition before it gets going. So really, I have heard before that people said if you were to buy one individual stock, they choose Microsoft because it's basically an ETF. As you can see, yeah, the Blizzard news made it pump. But there's not much to say about Microsoft. Everyone knows Microsoft, but yeah, I will hold this one for the long term. We've got National Grid, which is held because of its high dividend. Again, we bought this one at a pretty high price, but this is absolutely fine because we've got a couple which we actually brought really low. As you can see, Scottish Mortgage Investment Trust. So this had an absolute outflow of investors pulling their money at the start of the year, and it seems like we have managed to catch a pretty low price on this. We'll have to see long term. All it takes is a bit of news and it will dip way more heavily. But we're up 10%. That's very decent. I just like to say that from last time we got Tesla, it went up 50%. I sort of wish I kept it because it did go up further, but we took the profit. I do want to get back in Tesla. I think I'm going to start dollar cost averaging because I really did like holding it. But yeah, I just made the decision to take profit. So guys, basically, if you watched last video, we actually had Tesla and Palantir. Why did I sell them? So I'm really notoriously bad for basically not taking profits, seeing it go all the way back down. I thought, I made price targets for it, let it go up to that, and then, yeah, that happened. Did I miss out on a lot of profits? Did they continue to go up? Yes. Am I going to try and dollar cost average back into them? Yes. But with the £27 in dividends, with that as well, and the £5 we made from this, we're about £100 up in total at the moment, which, as we've been in the negative for so long, we'll take that. So with that, let's have a look at our ETFs. So if we look at Vanguard FTSE 250, we've got £207, up 3.82%. So this is where we actually rotated a lot of our profits. If you look at the graph at the moment, it's actually at a decent price at the moment, way off its highs, a lot of room for growth. There's been a lot of positive news about the UK at this moment. So yeah, I'm happy with that. I'd like to say thank you to Jubair's Finance as well for talking about it and actually getting my attention onto it. But next, as you guys know, so I've got a series about this, but we've got the FTSE All World and the FTSE All World High Dividend. So FTSE All World is actually 3.21%. This has been really good, just come into its own. This one we actually brought quite high, but it's doing very well at the moment. It's to give exposure to all parts around the world. So I know we're investing in the S&P 500, and the S&P 500 is brilliant because it's got an annualized return of 10% if you look at historical data. Although FTSE All World, basically we're investing in it so you've got more exposure to different parts around the world. So if something does happen to America, which means that its growth is stunted for a period of time, you've got exposure to other things out there. Then we've got, as I said, we've got a FTSE All World High Dividend. So this one is the only one in the negative, but only 0.47% down, which is brilliant because, as you can see, we've got a really high buy price, and we've been about 4% down on this one for a long time, so it's made a heavy recovery recently. So guys, we've got the S&P 500. So we've got, you might notice that we've got accumulation distribution. Basically, accumulation, it invests all the dividends back into the fund straight away. So this might be the superior one if you want to accumulate the S&P 500 because it means that you get less fees and all of that stuff. But the distribution basically means that you get the money given into your account and you can choose where to invest it. Some people quite like seeing, the dividend come in, and that gives them a lot of positivity towards their portfolio. But it doesn't really matter all that much. But as you can see, the accumulation, we got this one while the S&P was struggling more. But the S&P is near all-time highs, so when buying, that is something to consider. So this one might come back down. That's why I've actually brought some of FTSE 250. But saying that, I wanted to round these two off, so I've got £20 going in to get this one to 200. And the distribution, you guys can see that we're also up on this one, not quite as much up, but I've also put a tenner in to get this one to the next increment of £25. So with that, let's have a look at our pies. So if you guys don't know, we've got a series called Almost Daily Dividends, and this one also, like as reflected by the high dividend yield ETF we're invested in, has made a strong recovery. So they've mirrored each other pretty nicely. When they were both 4% down, they were both like 4 or 5% down, and now they're both 0.45% or 1% down. So they made a massive recovery. This one has just been changed, but I'll go more in that in tomorrow's video because I'll go into it. But basically, AT&T has gone down because it's been going down for like years, and the Dominican Republic Bank has been added in. I haven't added any money recently, so these changes hasn't come into effect. But yeah, as you can see that we've actually gained £17.48. £15.33 is being reinvested. And yeah, it's looking really promising. I think we can get the positives in this very soon. It does seem very promising for this. Obviously, when you look at Bitcoin, you've got the Bitcoin halving. So I think that Bitcoin is going to go up. And also, the whole economic situation seems to be looking a little bit brighter. But yeah, we'll have to see. the best way to invest is obviously not financial advice anyway, but just do it consistently. Create a plan that's tailored to the amount of risk tolerance you got, and just be consistent. That's always going to outperform being inconsistent, taking risks. But yeah, I know it's harder said than done. I struggle with it myself. But no, yeah, as I said at the start of the video, very impressive that we're back up over 4K now. I'm going to be starting a new job in September, but I'm trying to find just a little bit of part-time work to keep me tying over. But with that, I hope you guys did enjoy this video. Please leave a like and subscribe. I hope you guys did enjoy. Please see you guys next time. Peace.